Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading.
Now, I don't typically like to buy options in markup or markdown. That is not my strategy. I don't want to be buying options in markup or markdown because usually once the market has begun trending, it's unbalanced. Okay, if you consider a sideways market a balance between supply and demand, the trend is an imbalance of supply and demand. And once that market starts trending, it's obvious to everybody, and you're going to see your calls are going to go up in price. Okay. Now, one of the funny things is a lot of times traders might be saying, okay, well, yeah, in an uptrend my calls are more expensive. I'm not going to buy calls in an uptrend. If I'm not already owning a call, I'm not going to go buy one at this point. What I do want to do, and my husband actually loves doing this. This is what he'll often do. He'll look for those of you that are fans of Fibonacci, he'll look for Fibonacci retracements of 50% or greater, usually 50%, a 618%, or a 786%. And he'll look for strike prices at those levels on the chart, and he'll look to buy puts because, you know, he's a dude. He's a cowboy. He can't help it. That's what he does. You know, all of us, girls, guys, there's no bias here. A lot of people love stepping in front of the freight train. That's not my style, but a lot of people love to see if they can find that reversal point in the market. My husband usually likes to use Fibonacci and a combination of what I called psychological levels, those big figures, double zeros and 50s and so forth. So in a markup or markdown, he's going to be looking kind of contrarian, looking for those puts in the uptrend, looking for those calls in the downtrend. So if you ever have the inclination to pick bottoms or tops, do it with options. You know, I know there's a lot of traders that I know and that I teach. I see them making this mistake. They'll go hop in with the spot because they think that, for example, a particular move in the market is going to exhaust at a certain level. Now, whether it be the rally in the Aussie, okay, I don't know how many people I have spared plenty of pain because they just insisted on trying to pick a top in the rally in the Aussie. I said, go grab an option. If you feel so certain that you're going to identify the ceiling in this market, do it with a put. Do it with more limited, limit your risk. So that's where a lot of them started to take advantage of that type of approach. So if I'm looking at this possibility of one, either looking for the sideways market direction, low volatility. So we talked about accumulation, distribution. I'll tell you I'll show you how to identify those, by the way, in just a moment. So I'm either trying to take advantage of those sideways movements, or again, if you know, and this is where options can keep you out of hot water. If you know you're going to be tempted to start top and bottom picking, do it with options. It's a much smarter, safer way to do it. In a lot of ways, I'll be frank, I would rather you don't do it at all. Okay, I won't kid you. But is there an effective way? Is there a better tool to use in order to do this? Are there better ways to do this? Well, that's what I think we're talking about here. That's what I think we're able to take advantage of here. A more effective way to do this. All right. So again, if you're comfortable with using Fibonacci, if you're comfortable with using psychological levels, which I think everybody here in the room could do right now. Again, psychological levels are often also referred to as big figure levels. That's going to be any level that ends in 00. There tends to be a lot of price action accompanying those those areas. So, for example, if you were looking at a lot of you might be looking at the Aussie, and then it might take you over to the AUX. Now remember, the AUX is the US dollar, Australian dollar. So you see it's inverse to what you would have seen on the spot. That's something I also, oops, that's not the same thing. Let me try that again. Sometimes my e-signal symbols are a little bit different than, actually, you know what? Let's pick another one that's actually been one that I was actually just talking about this week, the CDD. So actually this one comes to mind because this is one I was just talking to some students about this week because of the parity level. How many people are watching parity on the dollar Canada?
A lot of people have been, Raghee. They've been emailing me about the parity, so it's very interesting that you bring that up.
And, that's great because this is where, gang, by the way, I know that I'm not a PowerPoint kind of gal, but what I'm hoping to do is I want you guys to go try these things out. I want you guys to look at your guys and gals, to look at your charts and say, okay, I can take that idea that she just showed me. I was looking at the dollar Canada on my spot. I don't know that I'm comfortable dealing with this parity level and the craziness of, how can you handle the risk? Remember, as traders, let me mention this really quick here, gang. Our job as traders, if you ask me, the best thing I can do as a trader is manage risk. And there's arguably no better tool to do that while still being able to benefit from volatility than options. Okay, so if traders manage risk, and that's part of my job description, and I'm seeing this parity level, and look at this downtrend. It's a daily chart, by the way. Look at this downtrend on the dollar Canada. All right, so I take this downtrend, and I see this 1.0 level, and I don't know how many of you right now feel that parity is going to be broken. You can see all the support here. Okay, I don't know how many of you want to try to pick a bottom because right now it's very risky either way. I mean, in some ways it's probably easier to follow the trend and say, okay, there seems to be pressure every time the dollar Canada rallies. And can we say this area here at 1.0174 is running into a resistance level? We did last time too, but as soon as we hit the parity, boom, things tend to stop. So is the market willing to get below parity? Here are two things that you can do, and this is exactly what I was talking about with my students earlier this week. Okay, this is just my take on it. So I started with an idea on the spot, and I said to myself, well, I'm not crazy about the idea of that leverage and hopping into the spot market with the ideas that I'm playing with. I'm probably better off hopping in with an option and giving myself enough time. So here's what I'm thinking, and you can see where it falls in line with your thoughts on the dollar Canada and how the options, I think, will better put you in a better position to manage the risk while still being able to take advantage. I mean, look at the volatility today here, gang. That is a serious candle on this particular chart. In fact, let me just bring back this power stat. Take a look at the dollar Canada. Here's the dollar Canada right here on the price movement range. 70 pips on average, upwards of 100, 110. So we're looking at about 110 to the upside, about 40 to the downside, 70 on average. Okay? So if I'm looking at my high to low range, like I said, 110 to the upside, 40 to the downside, 70 in the middle. That's my dollar Canada price movement range. Where do we fall in line with that today? I mean, it's a major candle. This below today, and let's go back to that spot for a moment. The low today was parity. So I was at the quadruple zeros there. And my high today was 181. So 1.0181. High to low range was what? 181 pips.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.